I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Alexandra DaCosta, CEO, and David Yee, the CCO of Aspen Creek Digital Corporation, or ACDC. Both of you, welcome to the show, and thank you so much for taking the time today.
Thanks for having us.
Yeah, thank you so much, Ashton.
You're very welcome. I'm excited to dive into the world of Bitcoin mining. I've been a huge Bitcoin and blockchain advocate for many years, but mining is not one of my specialties, and I always rely on the experts to hear on what are the latest innovations, how are we going green, and making sure that we're not using too much power, and also saving the world with Bitcoin, which requires Bitcoin mining to verify the transactions. So it's a pleasure to have you both on. Let's just dive straight into it from the top. I'd love to start with an overview of what is ACDC, how is your team working with Bitcoin mining, and then we'll dive into all the details.
Sure. So ACDC was founded a little over a year ago to be, kind of the world's leading renewable powered Bitcoin mining and infrastructure company. It was really started as an answer to the question, how can we maximize a kilowatt hour of power? And most importantly, how can we harness something that requires a lot of energy, in this case Bitcoin mining, as an opportunity to stand up new renewable power sources. So our focus is primarily on solar. You will see us with wind and battery later on. And what we really do is utilize Bitcoin mining, which, let's be honest, does require a lot of energy, but we use it as an excuse to stand up brand new renewable resources that are not only sized for our own purposes, but also sized larger than our needs to bring new renewable power directly onto the local grids. What it does for us is gives us access to very long-term cheap power, which is excellent for Bitcoin mining, but also gives us the opportunity to really understand that relationship between power generation and power consumption and how they need to work together, so that we can think about, how we can use this knowledge to apply it, to other technologies, or honestly, just kind of the next phase of Bitcoin mining as we continue to scale. So I will let David dig into our existing projects, but we are a vertically integrated company. So that means that we are all the way up to the data centers. So we develop, design, own, and operate our data centers. And right now you see us as predominantly hosting with a little bit of self-mining.
Yeah.
Very, very cool. Go ahead, David.
Yeah, just build on that. So to date, we have two sites that are built and operational. Our first facility was our pilot facility that we constructed out in Colorado. It is a 6 megawatt data center that's co-located behind the meter with a 10 megawatt solar farm. And then that was completed in early 2022. And then our second facility, which was a 30 megawatt data center that's co-located behind the meter with an 87 megawatt solar farm, was fully energized as of October this year, and we are just putting the final touches on full deployment at that facility. And so that facility obviously is just southwest of Houston in the Texas market, and then we're currently looking at our third and fourth products, which are also located in Texas.
Amazing. Great intro, and great to hear about the operations. I'm fascinated by the solar powered Bitcoin mining, and just to prove the point that, as Alexandra mentioned, you can generate excess electricity and you can power communities with Bitcoin. It's actually the opposite of siphoning power away from communities. So it's great to hear about that. I'm curious on the intricacies of solar mining Bitcoin versus the traditional mining that's been happening before the energy people came in and realized ways to optimize Bitcoin mining, and also just the difference between in Colorado and in Texas. I feel like you might probably get pretty good sun in Texas. Can you talk about solar and sort of where it's at with Bitcoin mining, and is that sort of the status quo now or not yet?
So, solar mining, or the Bitcoin mining backed by solar is nothing, kind of new or novel compared to any other type of Bitcoin mining. It's really just, I think for us, what's most important is that we are behind the meter, drawing from our own power generation. I say our own, we do not, hold those assets on balance sheet, but, contractually, are there for our purposes. And so, what the criticism about solar is, and this doesn't just revolve around Bitcoin mining, but is the intermittency, right? So obviously the sun does not shine at night, and so there's a concern about how you're mining Bitcoin if you're only generating power on the sunniest of days. You know, to be very clear, we do integrate with the grid. Not only does it allow us to draw from the grid in opportunities when we need to, but most importantly, it allows us to put that solar power back on the grid in those highest peak moments when the grid is really under duress, for example, on a very hot sunny day in Texas, when power prices are really high. And so I think what's interesting here is that we are able to have access to 24-hour power. It's just that depending on the time of day and also on the state of the grid, our power sources may be different. But I think what a lot of people fail to recognize is that whether you're plugged directly into the grid or whether you're plugged into a combination of grid plus wind or grid plus solar, Bitcoin miners are not mining 100% of the time, right? They are turning off. They're turning off when power prices are spiking or for other reasons. And so for us, the only difference is that when we're curtailing, when we're turning off and selling our power back to the grid, it's when the grid needs it most and we're putting additional power back on. It's not that by virtue of the fact that we are using some component of solar power that suddenly we're not able to operate to the same degree. I would actually argue we actually have the ability to operate in more instances than a lot of our peers if they're only drawing from one specific power generation source, right? If that power that you're plugged into spikes to some inordinate level, you have to turn off. With us, we do turn off because it's the right thing to do and to put that power back onto the grid because clearly it needs it. But technically, we could just continue to run off of our own solar.
That's great to hear and great explanation. That it makes sense. You know, obviously, if there were two suns with one at night, it would be a lot easier to solar mine. But there's a lot of limitations to work with the grid and then also help it when it needs it. That's great to hear. And you mentioned about other potential renewable energy sources for Bitcoin mining as well. Where is ACDC at with that, and are you exploring into ways that could be even more efficient?
Yeah, I'll take that one, Alex. Absolutely. We are already looking at how to integrate these at our site. Now, that's obviously not renewable generation, but it is taking in power when there's excess supply and then redistributing it back in when it's needed. We're also assessing wind, and we do have a couple of wind projects in our pipeline. And so when we actually integrate solar plus wind plus batteries, we will get to a point where we're 80 to 90% drawing from power behind the meter. And so we'll look very little in terms of power draw to the grid. And that's ultimately where we want to get to. We want to get to a point where we are relatively self-sufficient from a power standpoint, where we're not, putting any additional strain on the grid, and we're providing 100% optionality where we can then put all that power back to the grid when the grid needs it. And I think that could be a really, really strong value proposition in the future.
Okay, that's great to know. And with sort of the ESG goals and trying to fight against climate change, there's the notion of corporations using carbon credits or trying to be carbon negative or decarbonization. Maybe you can touch on the ACDC's efforts in decarbonization and how you play a role in helping the planet in that aspect.
So I feel like that's probably a good one for me. My role before this was heading up ESG and impact investing, and we could probably take up 10 hours talking about the hows and whys of a lot of the considerations that go into deeming an investment ESG compliant, into carbon credits, etc. But I think there's a couple of things that we like to focus on. We like to focus on bringing new renewables to the grid. I think that's first and foremost. And so there is the next phase of acquiring the RECs that are created by the solar side, retiring them, etc. So that's one kind of large argument. We're very fortunate that we are part of that process. But I think primarily what we look at is by the mere fact of ACDC's existence at these projects, did we bring new renewable power to the grid? And the answer is yes. And if you look at our pipeline over the next 2 years, there's about 3 gigawatts of new renewable power that's going to stand up. And so how we see, the kind of commitment and contribution to, climate change. That's very much the mission of our company. But it's not just about Bitcoin mining. It's really trying to show the marketplace that there is an opportunity to integrate large power drawing operators with renewable power. Now, some's easier than others, right? Bitcoin mining is an interruptible load. It means you can turn it on and turn it off, and there's no quote unquote lost work other than the opportunity cost of mining for Bitcoin. But you're not starting over from scratch. It doesn't take an hour to turn on and an hour to turn off. So we are very fortunate, but we did this intentionally to start showing how this works. So again, from a contribution from that perspective, when you look at carbon credits and all the likes, I think that there are a lot of industries that are focused on the acquisition of carbon credits or the generation of carbon credits through affiliates because they themselves are not able to reach their own or their country's net zero goals on their, through their existing operations, right? So someone is going to be generating carbon with their industry and they don't have a way to sequester it right now. So they think, well, if I go and I purchase a carbon credit, that carbon credit should theoretically help finance, name the initiative, right? Reforestation or carbon sequestration research or development. I think right now where we're at as an earlier stage company is very focused on standing up the brand new renewables, and that's massive. Point number 2 to that is, and this is from an investor perspective, is being extremely transparent about our processes. And that's a very painful position to be in right now in the Bitcoin mining world, because there seems to have been this massive kind of divide between who uses what as an energy source, as opposed to maybe focusing on, can we start shifting it in a different direction that makes it more efficient to mine Bitcoin or cheaper to mine Bitcoin, right? Stop talking about things that cannot be changed overnight. So what we try to do is just be very transparent about energy usage, energy sources, and say, look, we're not perfect, but we're going to get better. And from an investor perspective, those disclosures don't just allow them to tick boxes on the ESG spreadsheet. It actually allows them to underwrite our risk as an investment and as a counterparty. And I think that that's why we really focus on it, is that when you start looking at someone's energy consumption or where their materials are coming from, not only are you able to make a judgment call on the greenness of that information, but also you get a better sense of their supply chain constraints. You get a better sense of their cost of operation when you know what their power sources are. So I think we maybe do it for different reasons than ticking the box. And as someone that came from that world most recently, it's very dangerous to kind of chase the latest trends, because the minute it becomes a trend, it's over from a regulatory perspective, right? So do it for your own reasons and be transparent and stick to it, is how we thought about it.
Yeah, great point. Especially in the the world of decentralization, transparency is key. Be as transparent as the Bitcoin blockchain is with its transactions. So I like that initiative, Alexandra. And speaking of the Bitcoin and the revenue being in Bitcoin, and you're mining Bitcoin, you're collecting Bitcoin, you need to pay for the operations in Bitcoin as well. Miners were loving it when the Bitcoin price had skyrocketed last year, but the competition increased a lot. And then when it dropped down, there was less competition because some of the miners were struggling as well. I'm curious on how your team forecasts the expenses and the fixed costs when the price of Bitcoin could go back down. It could take another year or two for it to go really high. How do you manage selling the Bitcoin that you get to pay for the operating expenses, but maybe holding on to some of the Bitcoin in hopes that it does multiples again in the future years?
So from our perspective, in order to manage our Bitcoin exposure from a revenue perspective, the best protection that we have is to manage our costs, is to increase the margin as much as possible. And so if you are a leading cost operator, so if you're on the lowest end of the cost curve, you'll always have an inherent advantage over every other miner that's operating. The really interesting part of Bitcoin mining from an economic perspective is there is an inherent hedge to your revenues as the price of Bitcoin comes down. So if you're on the lowest end of the cost curve and as the Bitcoin price drops, other higher cost operators are going to have to turn off because they will no longer be profitable. What that does is it reduces the network hash rate and actually increases your Bitcoin mined per block. You know, the amount of hash that per unit of hash that you're contributing. So as the price of Bitcoin comes down, the hash rate drops, your Bitcoin production actually goes up. And even with the Bitcoin price coming down, your revenues will actually be normalized, right? Obviously, when going from 68,000 down to 16,500, it's not like it's a one-for-one, you know, makeup there. Like our revenues are clearly going down, but being on the lowest end of the cost curve means that you can weather the storm much better than others. So that's how you really can set up your business for success. We have also pivoted not only from self-mining, but also to hosting. And so from our perspective, it is more clear, more stable, defined revenue streams to our business so that we can make sure that we're managing our costs appropriately. So I think there's always going to be a mix. It's going to be self-mining when, you know, the returns justify the additional capex to purchase additional miners. But it's also, you know, assessing, is hosting the right alternative at certain times as well. We're really good at power. We're really good at managing our power costs. And so it actually works really well from a hosting perspective because many hosting businesses over the past year have struggled to actually deliver on their their promises, right? You see the bankruptcies that other hosting providers are going through. From our perspective, if we can manage our costs and we can offer a good rate from a hosting perspective, it's a win-win situation for everyone involved.
Okay, great to know.
And I would say just to expand a little bit on what David said, because I think it deserves, you know, kind of extra emphasis, is the power first model really enables us to view power inputs as more of an asset than a liability. Don't get me wrong, right? The power is not free. And if you aren't careful, you can get caught off sides. Thankfully, you know, we have a team in place who have spent their careers managing large risk and doing so, you know, with the kind of format that we carry. But I think that's a huge differentiator, is that not only have we diversified our income stream from a self-mining with the addition of hosting, but our ability to control a large component of our power does enable us to use that fluctuation in power as another contributor to, you know, ACDC's revenues, as opposed to just being a pure liability.
Okay, and I'd love to get a little bit more explanation on that revenue stream of hosting. You know, can you explain the difference for people who aren't familiar with Bitcoin mining? On obviously self-mining, you have some rigs, you own them, and you're mining. But with the hosting, is it that you're hosting other people's rigs, or you're just allowing them to tap in and pay for those costs, or how exactly does that work?
Yeah, so when in a self-mining vertical integrated business, you know, you're building all the way back to the substation, and you're building, whether it's stick-built structures or it's containers, the actual racking and networking that's required to draw the power for Bitcoin mining. As a hosting provider, you essentially do everything up into purchasing the mining rig itself. And so our customers will actually purchase those rigs, they'll ship them to us, we will plug them in and we will operate them and we will power them up. What that means is that the customer takes the vast majority of the kind of Bitcoin price volatility on their revenue line items, and then they're going to have a fixed cost line item to us. We typically charge a fixed rate hosting charge on a per energy usage basis. Although, you know, we can enter into some other creative structures as well, whether it's, you know, power cost pass-throughs and profit shares and things like that.
Okay, that's great to know. And yeah, that's from what I understand, you know, the mining rigs, it's tough for somebody to have one and use it at their house and try to, you know, the cost of electricity, they don't have that economies of scale like they have with you guys at the warehouse. So it's probably better for them to use it at your facility.
I mean, that's exactly the point, right? Most residential customers cannot compete with wholesale electricity prices. And so I don't know what issues that you guys are at, but, you know, typical retail prices where I am here up in Canada can be near 10 cents, you know, a kilowatt hour. That right now is unprofitable to be mining Bitcoin with an S19J Pro. And so, yeah, I mean, that's point number one is just not competitive from a cost perspective. But more importantly, a lot of Bitcoin mining investors, they're not operators. They're, for the most part, they're financial buyers, and they obviously see the value add that Bitcoin mining brings to the network, and they want to, dollar cost average their Bitcoin by mining Bitcoin as opposed to purchasing Bitcoin. So they may go out and they may buy 100 mining rigs, but then it's like, okay, so now what, right? It's actually slightly more complicated to run these things than people expect. They're very finicky. They like to operate under certain temperatures, under certain climates. They need the proper airflow. They're also extremely loud, so you can't really put them in other facilities. So these are very, very purpose-built facilities. If you want to be mining at scale, you need someone that knows what they're doing.
Okay, great explanation, David. Thank you. And speaking of very loud and large facilities, I'm interested to know about this expansion of the newest facility in Texas, and how big is that, and what does it mean for the expansion of ACDC?
So the third facility is going to be a 150 megawatt data center, co-located behind the meter with 200 megawatts of solar. The solar development is already complete, so now the final phase of kind of the interconnection work is underway, and then standing up the data center. So that is project number 3. We've kind of been jumping in 5x increments from our 6 to our 30 and 30 onwards. So it's very exciting. But I think what's doubly exciting about this project is that the real Achilles heel of the industry right now is access to these new power infrastructure and access to very attractively priced power. And so you're seeing that in a lot of particularly the publicly traded miners that have to disclose what their hash rate is, what their projections are going to be. And so what we're really excited about is the opportunity to enter into some really great strategic partnerships in the industry. I think, again, if you go back to the core values of ACDC, it is to help stand up new renewable power and to think about the creativity between power generation and power consumption. It's not to only ever self-mine and never share and never collaborate. We actually, we lead with power first, and there are folks out there that lead with, whether it's operations first or access to more capital or access to more machines. And so this is a cool one because it is big, and there is a very large amount of unused miners sitting on the sidelines looking for places to plug in. And there is more of a focus right now on utilizing renewable power. Particularly in Texas, you don't want to just be sucking more power from the grid. They really need more folks to help add new power to the grid and add flexible loads. So it's a really great state to be doing business in with our business model, and we're pretty excited to partner with some folks in the industry to, kind of team up on this bigger one.
Very exciting. And David, do you have any other details around the timelines or the partnerships, or what you're excited about for the next warehouse?
Yeah, well, I think what we'll say is we're guiding towards a second half of this year in terms of deployment. Hopefully have it all fully operational by the end of the year. This site at this scale is something that's going to have to come on in phases, right? It's not like we're going to flip the switch and then all of a sudden 150 megawatts worth of miners are going to be operating the next day. So, it is a big endeavor, but we are targeting, second half of this year for deployment. Yeah, like Alex mentioned, that the solar is done, so it's really on us to do the necessary work to do the site work that's required in order to actually get the power flowing where it needs to be.
It's very exciting. I'm looking forward to following along with that, and it's fascinating to see things that large be built. So I'm looking forward to it. Now, what is the best way for the viewers to learn more about ACDC, the types of power you guys are using, or get involved with some of the operations you're doing?
So we have our website, which is acdigitalcorp.com. We are also on Twitter, ACDC_HQ. And you can find any of us on LinkedIn or Aspen Creek Digital Corporation on LinkedIn. So you'll see some news about some of the partnerships that we currently have at our sites. We're always looking for, wonderful people to reach out and those that want to learn more about, integration with power. And, and most importantly, I think those that are pretty excited about this next phase of integrating renewable power with existing technologies.
Definitely. Well, thank you for making Bitcoin a greener place, and this initiatives that your team's building. I'm really interested to see this new facility go up. I will put those links in the description box below for the viewers to follow along, and let's definitely stay in touch and follow up, in these phases of the newest facility. I would love to do another video in the future. So thank you so much for your time today, both of you.
Thank you so much for having us.
Yeah, thank you so much.